Thank you very, very much. This means you guys grabbing the food should hurry up. So hi, I'm David True. Many of you know me. Those of you who don't, it's nice to meet you, and thank you for joining us here at NYPAY. Enjoy the event tonight. NYPAY events are typically, what characterizes them are the fact that it's interactive, and I've been pleased in the 5 or 6 years that we've been running NYPAY that one of the compliments we always get is that the conversations are conversations. It's not just people up talking on a panel. It's going to be a good one tonight. It will be on a fascinating topic. As we know, spend is moving over towards digital, and that implies that has a lot of ramifications because, I mean, how many times have you changed your Amazon default payment method? So that's great research that Deloitte have done. And we'll have a great panel talking about it. I'll turn it over to Ulrike in a moment. There are people who are coming in. As we build out NYPAY, one thing we've added recently is the ability for people to come in via webcast. So that's why we need to start on time, because there are people remotely. So I have a please read this announcement. We are webcasting tonight's panel discussion, and I'd like to welcome our webcast viewers. Welcome. To ask questions to the panel, please interact with other webcast viewers. Post to Twitter with the hashtag NYPAY, rather than using the webinar control panel. At the end, there'll be a survey, and the documentation or the material that Ulrike will be covering at the beginning of this conversation is posted on the handouts tab of your control panel, so you can look at that, because sometimes it's not easy to view if you're on the webcast side of it. But with that, keep checking out NYPAY. We got 2 or 3 more events that will be posted soon, so keep checking the NYPAY site, because there will be a event on the underserved in April and an event on payment aggregators like Yodlee in June. So keep looking at that as new ones come up. But right now we got a great topic, very good content. Look forward to a very good discussion, and I'll turn it over to Ulrike Guigui of Deloitte. Ulrike? I think she's getting mic'd.
There, you're fine.
Okay.
Now it's turned over to Ulrike.
Thank you, David, and thank you all for coming out. Can you hear well in the back? Okay. And I realize there's a storm coming. We're closing our offices tomorrow, so if you need a place to stay, you can just sleep here. Nobody will notice. Just saying. But we will run out of booze, probably, knowing this crowd. I'm really excited to be doing this because this research is really close to my heart. It's really started in 2 places. One, I was facilitating an innovation conference at a large card issuer. And obviously everything that happened there is confidential, so I can't share who it was. But somebody went on stage and showed us their new card application that when you applied on your mobile, immediately there was an incentive to make your card the default payment card for iTunes, for Uber, for Netflix. And this person said, by just being very smart about how we combine acquisition with activation, we're looking to double our market share. And if you know the US card market, those kinds of moves don't happen in the market. So my interest was piqued in the topic, and then a week later, I was sitting with the head of payments at another issuer, and he said, I'm really wondering what the shift to digital will mean for our business. So I went back to Deloitte and said, can we ask some consumers? And it's not that easy. It's a lot of bureaucracy here, just like where all of you work. But finally, we got some support from our internal group, and they went out and hired a researcher to talk to first about 1,000 participants to keep a mobile diary for a month and record all their payment transactions. And then we took some of those findings and we went out and did quantitative research to validate and to dig a bit deeper to really understand what is happening as you're moving from point of sale payments to digital payments. So that's the topic today. Before I go any further, I'd like to introduce my panelists. Alberto Jimenez,
correct,
who's responsible for mobile payments and many other things, as I recently learned at IBM. And maybe you can say a few words about what all that is, because I think that's really fascinating.
Yeah. Now? Okay. Good evening. My name is Alberto Jimenez, and I lead our order management, which means fulfillment, and payments software portfolio within Watson Commerce, which is one of the units of the Watson organization of IBM. And what that means is that we sell software on a B2B basis to retailers and other companies in the ecosystem and try to embed artificial intelligence use cases within those capabilities.
Alberto, does that mean you report to Watson?
Apparently, no. Not yet.
And then we have Pablo Cohan from Mastercard, who leads the wallet and Masterpass product suite there. And maybe also describe that a bit better.
Yeah, so I am responsible for Masterpass, which is our digital wallet in the US. And basically, I run the product and responsible for helping issuers participate in Masterpass and driving our acceptance through merchants. And then working with marketing to get all of you to use it. So sign up on the way out.
Yeah, thank you. So we will be having a Q&A with the panel, and then also we'll give the audience chances to ask questions. But I wanted to share some of our research highlights for the first 10 minutes or so. Obviously, PowerPoint is my life, so I'm not that excited to be here with yet another presentation. But what's on the slides is very interesting. So please, take advantage of all the information that you're getting there. And there's also the books marked by the beer bottles. Maybe you can take those off the table, David.
What was a water bottle?
That's right. Okay. So, feel free to take those home. There's more information. And then if you work for an issuer, I'd also be happy to meet with you in person. We can slice and dice this data for your organization as well. Now, when we looked at the shift to digital, we had a hypothesis. And this was, the hypothesis was that as the shift to digital occurs, there will be less choice. That is, less proactive choice made by consumers. And the way that I explained this to our research guys was that if I go to the Sports Authority today in a store here in Manhattan to buy a pair of tennis socks, I will open my wallet. I'm going to look at cash, checks, my debit card, or my credit cards, maybe I have a gift card, and I'm going to decide based on either habit or whether there's an offer that month, or maybe I want the control of debit, but I make a decision. Tomorrow, if I buy my tennis socks, well, first of all, am I going to open yet another account at thesportsauthority.com, or would I just go to Amazon? And if I go to Amazon, do I still open my wallet and look at how I'm going to pay, or do I just use the card that's already stored there, which is really the stored credential, or what we call default payment? And our hypothesis was that as spend shifts from going to the store to shopping online, there's going to be less choices that consumers make. So what does that mean for issuers, for merchants, networks, and technology providers? That's a big question, and we believe that that is going to change the market, and it's really happening very rapidly, and there's not a lot of tracking. What we'll share is just the consumer research, and then we'll have a discussion about the implications. So out of the, by the way, in the back, can you see this? Okay, so we just looked in the digital diary, in the mobile diary. We found the physical payments was still a lot of the transactions as well as transaction value. Then at the digital payments, and then at default payments overall. But where it really gets interesting, and this is the first confirmation that we were right with our hypothesis, of the digital payment transactions, 84% were already funded by default payments. And I was astonished by the number, but we can just maybe validate in the room here, who all has a card on file at Amazon? Let's ask the other way around. Who does not have a card on file at Amazon? But you shop at Amazon?
No.
That's impossible. No, you can't.
We're going to take a picture.
So that's basically what we found. And it's not just about Amazon, because Amazon is not all of e-commerce. It is across.
But I guess, so you can you check out as a guest in Amazon? No, you can't. You have to have a card on file, right?
Yeah.
Yeah.
No, you can check out as a guest. You can always.
Yes. I don't, really?
Yes.
And you can pick another card.
Yeah.
Wow.
Apple Pay makes it so easy to switch cards. I bet the percentage might be a little bit lower.
Well, we'll see about what's going on with the wallets. What's also interesting, and this might be counterintuitive because we're talking about cards, because ACH is just not sexy. But the majority of the most often used payment vehicle for these default payments was actually linked to a bank account. And that speaks to the fact that a lot of those payments will just be your automated monthly billing. when you think about the fact we had a mobile diary where we asked you to record every payment transaction, not just when you were in a store. Now, as you would think, the websites are the biggest source for default payments here being the dark green. But also in the digital app, where you really don't, where it's much more complicated to change your card maybe or cumbersome than on the website. And then in the automated payments. Even though at the point of sale, and this is your Apple Pay, that's where already we see 2% of payments being conducted by your stored credentials. So we expect all of these just to go up as we evolve. And we've done a forecast for the next 2 years as well. And again, I'm just going to share information without too much implications because that's what we want to get out of our conversation later. The e-commerce retailers, internet service providers, telephone, cable, that's really where this is starting to be seen most frequently. And interestingly enough, the adoption rate is even for something like rent is 30%, which that is not something that I think any of us would have guessed that even rent payments are enabled in that many places. Now, in line with that, we're seeing rent on there and also travel. This finding maybe won't be surprising, although to us it was surprising. We had to think again a bit about where was the volume of transactions coming from. But the percentage increases by size, so the most popular categories are between 500 and 1,000 and 1,000 and above in terms of where these default payments happen. So it's not something where I say it's minimal risk if I put my credit card in Amazon because they're just small payments. Consumers are really trusting. They give up their financial information and they will not change that again.
On the
Sure.
slide, sorry. Is the share default payments by size transaction, I would argue that depending on the websites, I don't know how the study was done, that some of the higher transactions you may have an account already, so you have a default payment. Does this account for smaller purchases of one-off where you check out as a guest?
No. This
Okay.
is not, no guest checkout does not
So you have
count.
to be,
You have to have,
account when you're
that's right.
Okay,
Mhm.
thank you.
Good question.
And do you know what that was? It's like airline tickets, maybe?
Yeah, so that's what I think it's rent, airline tickets, and just the higher categories. We think it's a lot of airline tickets. And then what are the primary drivers? So convenience, and it's interesting because we all remember back the late 90s and early 2000s when people didn't want to use their credit card online. And the argument was always about security. But I think people have both now understanding that there's zero liability for any fraudulent losses. The convenience argument really seems to be winning out. But I'd love to hear or have Pablo tell us a bit later about how transactions are being made even more secure with some of the new products out there. And then why would you have more than one card stored? Because people say they like choice. So we thought that was an interesting question as well, because it's not automatically that you just go to the one card. Although we'll see later that once the card is in there, it's very unlikely to be displaced. And then why would you use ACH as the default payment option? And here we have a lot of security and trust in the bank, as well as convenience. And I think when you talk about ACH, people often say it's very cumbersome to link checking account to anything because you have to look up the routing number and the account number. So the convenience here, I would assume, just is comparing that to sending a check in the mail. It certainly is less convenient to add a bank account than to use a card. Here, as we said before, cards dominate both online and in apps. Of course, and this was surprising, and I'm wondering if anybody here has experience with mobile wallets and has seen that in mobile wallets, 41% of people link to their account.
That's PayPal.
That's PayPal probably, right?
Or Venmo.
Or Venmo, they consider. Yeah.
It's got to be dominated by PayPal.
Yeah.
Yeah.
Because you have to put
Because-
one.
Venmo is payment.
Right.
Until
And
they start
then,
making money, we'll see if it changes though, because
Right.
so many people set up that way.
Okay. What else do we have here? So then you have those, the different profiles really of people who use the bank account versus the credit card as the default payment instrument, or rather the different profiles and different people. So 85% of transactions for financial services. So let's say your mortgage payment that was linked to a bank account, rent and bills and utilities. I think nothing surprising there. And then the credit card, it's transportation and parking, e-commerce retailers, and then your Netflix, your digital media and entertainment. And here, transportation, parking, I would say Uber and the various parking apps. What else do we have in here? So this confounded us a bit because we said, how do you choose the card that you put in there? What are the criteria? And the number one criteria was security. So there must be an assumption that storing your card is more secure than other forms of payment that you could link. But again, we're a bit confounded about what consumers are telling us here. Definitely cards that can be linked to free shipping, and then you have all the other reasons for adopting a card in the first place. And here, this is something maybe that we can also talk about with Alberto and Pablo, if the card company makes it an easy process. So they think it's a card company, we really know it's the retailer that controls how easy that process is currently, but there might be ways for card companies to also make that easy, and we'll hear about that. And now here's an interesting observation. Why would somebody dislodge their card? And really the major reason is because the card has expired. And when you think about the power that gives the retailers, they see the cards expiring. I think one of the implications here, without jumping into that, they could either sell that data or use that data to really direct the consumers the way that is most advantageous to them, or even use it as a revenue source. I mean, that's certainly what I would do if I were Amazon. I would take all the non-Chase cards and go to Chase and say, do you want to make these people an offer to put them on your Amazon card? That's not currently happening, but that seems to be the major breakage and entry point for anybody to dislodge the consumers that are currently in there. And this is nuts. So then we also wanted to do a bit of a forecast because we did think that all these changes in behavior will lead to changes in payment mix. And here's the likelihood, the bright green, extremely likely and likely to increase my usage. First one is at a website of an online marketplace, 50% are going to increase their usage. So across the board, there is a likelihood to increase the use of default payments, except for the mobile apps, where that was less likely to happen. Probably because there's already pretty good penetration.
Just take it a little further with that one, though, on the mobile app. You're saying there's less likely to increase use of default payments, because it's already so heavily penetrated, you're saying. Got it.
And that could be one explanation, yeah. And finally, so we translated that into really what is it going to mean in terms of growth for these different payment devices. And surprisingly, because one of our other hypotheses had been it's the end of credit cards as we know them, it's not the case. So credit cards and debit cards will pretty much remain where they are, and there's going to be a big increase in ACH over the next 2 years, as well as in wallet, and others will decline. This is taking the total payment mix, not just what's in line, but if you look at the total payment mix today of transactions, which are today, by the way, 85% physical, 50% digital. Once we get to 62% physical and 38% digital, the impact on the mix will be that the other, which is most likely cash and check, will be reduced. But credit and debit are really going to hold their strong position. So then it really becomes a question of how are you that credit or debit issuer that wins against your competitors in the space, and how do you also compete with the increasing adoption of just linking the payment to your bank account. Yes, Deb. Okay.
If this is a Deloitte forecast,
Yes, based on the data that we have from
what do you think about faster payments? Do you think it's too soon for it to have any kind of significant impact?
This was not, we didn't ask experts, we asked consumers, and I think if we'd asked them about faster payments, that would have not really resonated. let's leave it at that. But we have point of view on faster payments in this.
That's a different discussion.
So that's the end of the data.
I have one more question on that slide. I don't see prepaid cards. Did you count debit as prepaid cards? Okay, very good.
Okay.
Who's got a loud voice? If you need one.
I can try. I can try. Just a question on the forecast for increasing ACH. And I was just wondering when the survey was done, because with PayPal doing deals with Visa. We're doing deals with Visa and Mastercard. They're going to be, having more volume, more payments funded by credit card, and not steering folks towards ACH. Would that impact that forecast?
That's an interesting question about PayPal having deals with Visa and Mastercard. When I make a PayPal payment and when I use my card, they still charge me a fee, and the ACH option is free. So and they've been trying. We had somebody at one of our last events about the Internet of Things, somebody from PayPal who had worked on driving from credit card funding to ACH for 3 years, and
crushed because he spent 3 years of his career trying to drive more ACH volume, and then his management cut a deal to say we're not going to do this.
So, but having said that, I think the beauty of free with ACH, that's really how they're going to continue to drive that, I believe. But we should, I think that might be a good question also.
That they're not going to drive it.
Well, they're driving by their pricing decisions, right?
Yeah.
Sorry? Yes. Actually, if we can move to the panel. And then we'll go to the audience questions.
There's always audience questions.
So I'm just curious, one last question on the research. Did the research into default options look at all at those instances where the consumer had free choice of default versus where they were steered, either, for example, the instance of PayPal to ACH versus credit or debit, or perhaps by a merchant with a co-brand program to the co-brand partners account versus a generic payment card account? Was there any of that in the research?
Fanny has looked at every single response now, right? No, we did not ask that question.
Okay.
We just, we really only had the hypothesis early on, but we didn't want to let the research influence the consumer's perspective. So we asked the questions to validate or not validate the hypothesis, and this is pretty much what they told us. So if we'd asked questions like that, I think we might have gotten a bit biased answers. All right, so let's move over here. Okay, so one question I have, maybe I'll start with Pablo. Tell us a bit more about the Mastercard solutions that really go beyond just card on file, and how does that help the issuers overcome some of the hurdles for consumers to store their credentials?
Yeah, so MasterPass, it's a digital wallet product, right? So I was trying to explain how do I talk about this, because from a certain perspective, it is a digital wallet for the consumer. That's what it is, that you can use the same way you use all the other wallet options that are in the marketplace. For the merchants, it's another form of accepting payments. The same way you see PayPal being a button or Visa Checkout being a button, MasterPass is a button on the merchant's website. So we need to have an acceptance play. But I think the key difference around MasterPass is really how we go about with issuers and what issuers bring to the table on that consumer relationship. So MasterPass is a platform for the issuers to have their own wallet. So right now we have Citibank, Bank of America, and Capital One, amongst other regional like KeyBank and SunTrust and the likes, supporting MasterPass. And what that means is they have their wallet. So they can communicate to their consumers that you have a wallet with us, your cards are already in that wallet, and you can enable it, something we call digital by default. So if you think about Apple Pay or the other ones, you need to enroll. The consumer has to take out the card, take a picture, put information there. As an issuer, all of that is available already on your systems. So you can receive an email saying, activate your wallet, start shopping. And as you evolve in that relationship with a consumer, it brings a lot of benefits. You lose your card. You can get the card immediately delivered to you digitally. So then you can still make payments, whether it's online or tap and pay through NFC, even if you just lost your card a minute ago. They can reissue your card as a token, put in that wallet, push everything to you. And then they can bring other services like pay with points and things like that, like instant redemption, all of those features. So for us, to the issuer community, it's a platform. What that means to the consumer and some of the data points that we're discussing is, what we found in our research is there's a lot of trust factors that influence the decision making on whether or not I'm going to use card on file or a certain wallet. And we found that the consumers trust their financial institutions. Not surprisingly, you have all your money there. So when a wallet becomes available from an issuer, they're going to tend to prefer that payment method over other mobile wallets.
Okay, so that's very interesting. You've told me that all the major banks have enabled or are able to offer this to their cards. So there's been a lot of receptivity among the issuer community.
Yes, the issuers are evolving their strategy around that. They are going to market with the Masterpass approach. Like everything, consumer adoption is still a bit behind that approach, but that's expected. We know, like everything else, early adopters jumps first. As we get all the issuers up and running with their programs and their marketing approach, we're going to see this, hopefully, my career, moving into the massification of wallets.
And now I have to ask a question with just my marketing hat on, and that now that we've already established about default payments, now the interesting battle really moves to the next battle line, which is the channel conflict. So if I'm a Citibank product manager, how do I now manage my Apple Pay promotions versus my Citi PayPass promotions? And I'm probably better off with Citi PayPass because my name is still there, and on the wallet I don't really have a presence anymore. How is all of that being thought through by your clients?
Yeah, it's a good question, and I think all of those things are starting to figure out. So it used to be a battle for top of wallet, right? You were fighting for that on the consumer point. Now that may be evolving into a top of digital wallet, or we're still trying to find the term, because you may not be competing to be the top of form of payment, top of wallet as used to call, but now you need to see, okay, I want my consumers to use Citi Masterpass. That's what I want them to use. And from that perspective, if the organization aligns behind that, then the marketing person behind the card program, it's going to create promotions around usage of that wallet versus promoting something maybe with Apple Pay or Samsung Pay or Samsung Pay. I think we are in that process of seeing how all those things are going to play out. But what's very interesting at the end of the day is issuers and Masterpass, to a certain perspective, have to remain conscious of consumer choice. That will never go away, right? So, and that means that if my consumer wants to be on Citi Masterpass, I'm going to make it super easy. And if a consumer from Citi wants to be on Apple Pay, I have to make it super easy. So, from that perspective, Citibank and all the other issuers have to balance that relationship from consumer choice. And one of the things we work a lot is how do you transform that app, that mobile banking app, into something more? Something that you relate, that you create a relationship with the consumer, and payment becomes one of those legs on that relationship. It's not the only one.
Okay, so that is actually a perfect transition to Alberto, who now, it seems like you run everything from the moment the transaction is accepted to what is called the ordering.
Order management.
Order management. But before, I know you launched a wallet for a retailer. So I'm just curious now that Pablo's told us it's all about the trust that consumers have in their bank. Where do you see the retail wallets playing out? And is that still a thing? Because it was a big thing like a year or two ago.
Yeah.
And you're no longer running it, so now you can tell us really what you think about the retailer wallets.
So yeah, we have a product called IBM Pay, which is a white label merchant-centric wallet. So if a merchant wants to do what Starbucks did, enable a merchant-centric wallet that only works in their stores, we have a product, and Ulrike is referring to it. So I do believe that merchants do have the most clear levers to change consumer behavior within their stores. I think they control loyalty, they control points, they control a number of things that third-party entities like banks and networks and even device manufacturers can't. So I do believe that in the future there are going to be other successful Starbucks examples like Starbucks, and I don't think it's going to be thousands of them, but I do think that the big, strong global brands of retailers will be successful at driving adoption.
And in your interactions with retailers, what do you find do they even think about payments? Because we all think about payments all the time, and David True keeps telling me you forget that they run a business and payments is just an afterthought. But I know that retailers want to always improve their margin and they want to sell more, right? So what is the motivation really in making those point of sale decisions in terms of making it easier to accept versus incenting certain payment types versus driving to the low-cost channel? Is there a strategy that is emerging among the retailers, or is this all still forming?
I think there is. I think there's a group of retailers like Walmart Pay that have launched their solutions, and they're card agnostic. You can load any card onto their wallet. But there are others that are actively steering consumers towards lower cost acceptance instruments like calls. So I think, it is top of mind. I think they will try to use these. I think these wallets are going to be for people. It's not, if you go to a certain store once in a year, you're not going to download the app and you're not going to load your card. However, for people that always go to the same store and that have the private label card, those people have strong incentives, or I guess the retailer can offer strong incentives for them to change behavior. And in that scenario, yes, you can probably steer them because you have promotions and coupons and discounts that you can use to accomplish that.
Alberto, that's a good one because I haven't seen a lot of that. I know it's one can do it within the constraints. If one gets too aggressive at steering, there are still legal issues being fought out about what they can do. But you said Kohl's is it with Kohl's Pay they're trying to steer a particular form of payment?
To my understanding, the Kohl's Pay announcement, the Kohl's Pay product, only accepts the private label card online.
Okay.
And Level Up steers you to debit card.
Okay. So
let's jump into the
maybe
audience
someone knows
Q&A.
more than me. This is from the press.
Can I ask, there was a lot of discussion about wallets would succeed when they had utility both online and face-to-face, right? And there was always that argument that there were a lot of things happening face-to-face, like Starbucks, and there were a lot of things happening online, like PayPal, but the opportunity for wallets was at one point thought to be when someone was going to be able to deliver both through a phone. Is that still part of the discussion?
I think it is, and when you look at what's happening, so Masterpass, and we can claim this, we were the first omni-channel wallet. We started on, I'm not kidding, you're laughing at me, but I'm not kidding.
I'm sorry.
We started on online. We really started as an online wallet. That was how we got to market. But our vision was always to go to point of sale and create that omnichannel experience for the consumer, that you loaded your wallet once, and no matter where you wanted to check out, you could do that. And you see that starting to happen. You see that Apple Pay is slowly migrating to the web and trying to build their acceptance channels. You're starting to see that unless you can check out on all channels that a consumer is, the wallet starts to lose a little bit of that value. Like, what's the point, right? So it's happening, and I think we're going to start to see more of that happening. I mean, Visa launched their Visa Commerce platform, which is aiming to issuers to have a wallet as well for point of sale. They have Visa Checkout Online. So we're going to start seeing more and more of that unification of all the channels on the wallet side.
Thank you.
Can I go ahead and ask a question?
I still have some questions I'd like to ask. I have no chance against this crowd. You have the
I
microphone.
have a really good question in the middle.
Okay.
Okay, so there was a World Economic Forum paper written about 2 years ago where they looked at a very long-term forecast of what would happen with mobile wallets, and they had two opposites that either or both could happen. One was, just like your research says, is that a card gets lodged in a wallet and you never think about it again. And the bank actually, you don't even see the bank name anymore, it's just stuck there. But the other possibility is if the wallets get smarter, and I don't think our wallets really are that intelligent yet. And one example they gave is there's a thing called Wallaby, which I'm using, and if you integrated that with a wallet, it would be awesome. It tells you which card to use at that merchant on this day to maximize your points. So then that would result in the opposite, where complete fragmentation, where you have 10 different cards and would pick whichever card gives you the most cash back for that day. And I just wondered if you guys, which way do you think it'll go, or both?
I think that I met with those guys when I was at Citi, and I think they were acquired eventually, but when they were still independent.
They did well.
But our problem with it when I was at Citi was, or not our problem, but my question was, who has the incentive of optimizing rewards and points? It's good for the consumer, yeah, but they're not a company. We cannot organize as consumers and launch this value proposition. You either have to deliver value for the issuer or for the merchant. And if you're on the other side optimizing or gaming any of those two, I think you're on the losing side, because no one has the incentive to invest in deploying that platform.
I think the moderator has a question.
So I wanted to ask you about the black swan scenarios of what can really happen with this information that the retailers have. And one hypothesis that we also had, and we're asking whenever we meet with industry experts, their point of view, which I would like to hear your responses without prejudicing it, is if you're Netflix, you're Apple with iTunes, you're Amazon, you know that you have all these card customers, you know that your cost of accepting that is, let's say, 180 to 200 basis points in a razor-thin margin environment. And they also have a lot of information. So if you have your Prime customer who spends, let's say, $10,000, acceptance cost is $200. So why would they not use that to get them to go through the effort of adding their account using ACH and give them some very relevant benefits that might be more relevant to their consumer than airline miles or points? And we would just see all of these card portfolios losing in value because all the spend that's gone online has now been moved to another payment type. Is that likely? Or what other unintended consequences do you think is going to emerge from this fact that the retailers now have all this information?
I think that possibility exists. I think, you just said it, so these three companies, Netflix, Apple, and Amazon, their interchange bill might be $10 billion, let's say, or $20 billion. It's huge. If you're gonna do that at scale, I think you're going to find yourself at odds with the issuers who control the funds, the source of funding. And I still think the source of funding is the control point of all of these that we're talking about. Except if what's happening in Europe with access to third parties and all of that, outside of regulation, of regulatory mandates, the issuers continue to have the control point of the source of funding. And in that situation, I don't think these 5 banks are ready to lose $10 billion in annual revenue like that. So I think they I don't know if they have a recourse, but I don't think it could be like an automatic thing that you can move everyone to ACH and then bankrupt 10 card organizations at Citi, Chase, all of them. So that's what I think.
And so you're saying they're controlling the source of funding because they hold the checking accounts, the DDA accounts?
The DDAs.
Okay.
That's an internal discussion that needs to be had within the bank itself between who to favor, whether it's the card issuing side or the ACH side, right?
Yeah, but absolutely, I agree with you. But the 200 basis points on the card side is a lot more than the whatever ACH revenue that can be generated.
I completely understand. I just have not ever heard how that has been resolved internally. but that's a kind of different
Right.
discussion.
So I think the way it's resolved is that, oh, you guys make more money, so let's continue to do it.
As long as we can.
Yeah, unless they're forced to.
They're in practice, they will say.
So Pablo, is that something that the payment networks are losing sleep over?
So we as a network, we are looking into what we call alternate forms of payment. ACH is there, P2P, Bitcoin type of stuff is in there. We know the world is evolving, and we know that a network can add value to those forms of payments. The question is how we do that. So, it's no secret Mastercard acquired VocalLink, which is one of the largest ACH companies in the UK and globally for a reason. We know there's a trend in the world, and we need to find a way to not only participate but to add value. So we're edging our bets.
Okay, so talking about VocalLink and real-time payments, and David asked, or somebody asked why it wasn't on the list. Is the advent of real-time payments and the way it's currently looking in the US going to make any difference here over the next 3 to 5 years to what we saw there?
I don't think so for consumer to business payments. I think the banks will continue to defend their interchange revenue as long as they can, and unless there's like a regulatory event that forces them to change, I don't understand why they would do it. And it seems like in the political environment that's not going to happen. So I don't think so in the next 3 to 5 years.
Your view on real-time payments?
I think it's going to...
It's the banks that defend the interchange revenue, it's the networks that set it. So it's an interesting dance between the networks keeping the banks happy and not irking the merchants too much.
But the ones that make the most money are the issuers, right? If you split those 200 basis points...
They don't set the price.
Okay.
Yeah, I think we need to be careful because this is taped and we don't want to put Pablo in an awkward position.
Yeah, no, I'm not. I want to get myself excused with certain questions.
I used to work at Mastercard, and I know that it was explained to me we sit on top of this wealth transfer from the merchants to the issuers, and that's a very delicate balance to play, right? So I don't want you to have to answer the question if you don't feel like you can.
No, listen, what I'll say is faster payments, it's something that will benefit everyone in the industry, but my personal view, and I think where we can see some benefits to the end consumer, it's in some of the other things that we're seeing on remittances and payments from insurance companies, things that are now from certain ACH based because it's a check that you're getting in the mail. How do we eliminate those things from the system and make it more efficient? That's where I think faster payments, ACH comes into play.
Yeah. Okay. Now we go to audience questions. Now's the time for it.
Mr. Microphone.
Actually, a question for.
Turn it on. Put the lights on.
Also, if you could introduce yourself so we all know.
Yes, I'm Scott Stovall, Meta Payment Systems. So, question for Ulrike here.
Ulrike.
Ulrike?
Yes.
I'll try to study ahead of time. My apologies.
I didn't mean to correct you. I just didn't want you to find out afterwards, then you would have felt really awkward.
I won't call you Laura.
It's like swimming pool and Eureka.
Okay, go ahead, please.
So, I found your data very interesting, and it leaves me with a question. Why are we not seeing the merchants do more to steer today? I mean, even if you have the hypothesis that, and I think David's correct, that the merchants really just want to maximize sales, not so much reduce expenses, why don't we see like co-offers with issuers of like pay with Chase and get free shipping today or other things? Why is that not there today, and what needs to change so that it would happen? Because there's a lot of money here if you can begin shifting this stuff.
Is there anybody here who represents a merchant or an acquirer? So do you want to say something to that?
Sure. So I work for Fanatics. We're $1 billion retailer, and so I kind of run payment solutions. So, but I'm a little unique. So I come from Mastercard. I had a long career there. So I'm kind of the wolf in the chicken house, I guess. And so we are managing, and we are looking to affect how payments interacts with our customers on our site. So we are at this point testing with the different wallets. So we recently did a wonderful MasterPass deal. And we're going to see what conversion is like with MasterPass. We did a PayPal deal not long ago, a couple of years ago, so we know what the conversion or lifts were from that. We're going to compare them, and we're going to continue to do it. Apple Pay is coming to talk to us. Samsung Pay is coming to talk to us. They're laying out their path, but there's only so much real estate. And so we are going to test, and we are going to figure out what our cardholders like and what, at the end, what is important for us, does any of these affect conversion, meaning the purchase at the checkout. And whatever we find that works best, for us, whatever is fast and frictionless for the consumer, but is also for them safe and we feel creates a converted transaction at the end of the day better than putting your information in the regular way at checkout is probably where we're going to end up. And then we're going to end up narrowing down who those players are on our site at checkout.
So that's
you're purely online, correct?
We are purely online, but we do have some in venue, some point of sale. We have the NBA store here in New York City. So we are partnering with payment partners, such as American Express. We took them down to the NBA All-Star game where we had on-site sales, whatever, and they were an official sponsor for getting a discount, what you're talking about. If you used your American Express card, you got a discount versus someone else who didn't have an American Express card.
I'd like to see that contract.
Okay, so what I'm picking up on from you though is you mentioned conversion rate and making it easy for the customer. You didn't mention cost at all. And I don't know, Scott, were you driving at why wouldn't merchants steer to the lowest cost providers, or where were you going with your question?
Not lowers cost, but actually trying to maximize revenues.
Maximize revenues, okay.
It's like in your data, you show that I think one of the second highest thing for getting people to change was free shipping, which is a pretty low cost item if you think about it. So if I'm an issuer and I can get all these nice recurring revenues and I have to pay for shipping ones, I'm surprised I wouldn't see more of that, because it would also be in the interest of the retailer, because they would probably be able to sell more stuff if they could see, oh, I've got free shipping today.
Okay.
Or other offers.
So do we have other merchant perspectives? Why don't merchants steer more? That's your clients.
I'm not a merchant, but we sell to merchants, and I do well. So I came from the issuing side. I was at Citi, so I've been learning over the last 2 years selling technology to merchants that they actually do pay a lot of attention to these. They are getting a lot more sophisticated, and they are hungry for things like intelligent routing, being able to do a lot more with technology, being able to lower their interchange with technology. I think that is more and more, certainly higher conversion rates. It has always been a topic, but I do think that they are paying more and more attention of what technology can deliver to them in terms of cost of acceptance.
Yeah, and I think to add on the merchant side, what we're saying is number one thing they care about is throughput, right? People coming in, people getting something going home with it, so items shipped and stuff like that. And as you go into now in the deeper funnel is, why didn't they buy? But was it a transaction fail? Was that fraud? They're trying to look at all those items to continue to drive that throughput. They want to get a transaction completed with a good source of payment. That's the goal. And then from there, optimize costs.
I don't know how many people here use CVS Pay. Of course, I try everything and I shop at CVS. And they're doing something different than anybody else, which they combined it inside their app, which has all the coupons and everything. But they also combined it with picking out your prescription. So they take steps out of the whole checkout process for the prescription. And they also combine it with your loyalty card, so you don't have to show the loyalty card separately. So they're not trying to save money, but they're trying to make it easier, the whole thing easier for the consumer, which I think is pretty interesting.
Yeah, probably they had some research which shows that friction was causing not to fulfill their prescription, go somewhere else and stuff like that. So we see a lot of that happening, and removing friction has been one of the top things for everyone. That's why Starbucks launched their thing, right? It's all those things, and as we move past the friction, okay, the friction is solved. We get a lot of people at the end of the funnel. Comes the next evolution of that, which is lowering fraud, getting better intelligent routing like he was commenting on. That's the next frontier.
Jim.
So, it's off. So, being Swedish originally, payment provider near dear to my heart is Klarna, which is making inroads here in the US now. I mean, huge in Sweden, UK, Germany. And their business model here is slightly different. But you're talking about friction. They're really eliminating that friction, especially I think in Europe, where in Sweden you just sign in with your email address and zip code and they send you an invoice later. What's your view on them in the future?
I think we as a society need to get to that point. I mean, in Sweden, I think they were testing a store. They had no cashiers, and they're using cameras to validate what you were buying, and then as you were walking on the store, checking out and charging you. So the idea is to get there. It's going to take time, technology, and I think a lot of the trust, both on the merchant to say, I'm going to put a store that has no employees and everything's automated and use technology to fulfill payment. I mean, Google was talking about the cashing out with your face. There was a beta that then launched. We're going to get to a point where technology will remove friction, for sure. The friction we're introducing is to create either some sort of safety net, whether it is validation of the consumer, because we need to do that for authentication purposes, friction to know that we're going to ship it to a place that we can ship that item or that you can make a transaction from that item. So that's where the friction comes in. It's introduced by us. So as we evolve and we start trusting that technology can remove that friction, we're going to see those things back there.
I'd like to ask the experts to give us their opinion on some compliance issues or topics. One would be the source of funds that you mentioned before. Is there a perceptible difference in lift in terms of credit sourcing versus debit if the money's coming out of the DDA? And from a Know Your Customer and AML Patriot Act perspective for US issuers. And then second part would be relative to any impact at all of PSP2 in the US based on the implementation in 16 and the rules need to be followed by 18 prescription from the PSP in Europe.
That's a lot of big words. Maybe can you tell the uninitiated here about the PSP? And
it's just a new set of payment service provider guidelines.
PSD. Well, what I used to do at these events, if anyone used an acronym without explaining first what it meant, there was a penalty.
Payment service provider.
Okay.
Sorry.
So that's a question for we
I'm
decided.
actually more interested in the U.S. answer.
Okay.
DDA versus credit.
So, and then the question is if the source of funding is a debit account versus a credit account, if that has higher conversion rate or if...
Is it a heavier lift for the FI, the issuer,
I don't understand. What does that mean, heavier lift?
Is it harder to comply with everything for DDA than it is versus credit?
Oh, I don't know the answer to that. That's not my area.
Somebody from an issuer perspective?
I mean, the merchant's not going to care.
That would go back to when they open the account.
I think I mean, when you talk DDA, are you talking about linking your account, or are you talking using a debit card?
Using your account.
Well, I think there's the actual compliance requirements.
I don't know. I've been kind of hearing a little bit of a murmur that the lift around compliance for credit is less than it is for debit and or ACH.
It may be that to open a card account requires less from a compliance perspective. What we're speaking now is anyone who's got an account open, as opposed to the effort of getting an account open. So, I mean, my current client is going through money transmitter license. There's a bit of a pain in the ass there. But right now we're speaking about people who have accounts, whether it's an ACH or not, as opposed to the process of getting them on board.
Okay.
Compliance is an issue.
I don't think so.
All right.
I'm the total newbie here, but at some point in time, so I have an app for travel that just pulls my payment is basically through Apple Pay on my phone. And I could have 5 cards, obviously, in the Apple Pay. Won't that just be exactly like the wallet you were talking about in the beginning, which is a hard card, which is basically giving me choice? Because I could just do my payments directly from my phone at some point in time, assuming most like obviously Amazon has my card, but not every retailer has my card already.
Yeah, I think the Apple Pay still does a visual job of replicating a wallet, right? Because you can actually see the plastic and the design, and that actually is a good lead in to maybe a question to the two of you, as you have more wallets where you don't see the card anymore, not like the Apple Pay, but you've just lodged your payment credentials. How important is brand still? Is the importance of brand going to change as payments become more automated and less of a thoughtful consumer decision and just a foregone conclusion?
Yeah, it matters. I mean, in every acceptance deal, whether it's point of sale or online or a wallet, there are brand guidelines. That's why you see the stickers. That's why you see the brand represented either from a small logo to the big card, and the card, it's going to be there. It's not going to go away. And I think also you have to disclose what type of payment you're using. So if you're going to use a credit card, you need to show to the consumer this is the credit card, the form of payment you're using. And at that point, there's branding. So that's not disappearing.
But that's branding at the network level, not at the issuer level, right? They don't have to show you using
Which is why we
credit
introduced
card.
Masterpass.
So I think that's the question I wanted to ask, and it's sort of halfway answered it, but I'll push it a little bit further. Because Mastercard, I mean, I worked there for a while, makes money anything that goes across their rails. I don't know if there's differential pricing between that using Masterpass or not. I doubt it, but I'm not going to put it in the spot. So is Masterpass sort of just to make sure your brand doesn't get too lost? Since if the transaction takes place on a city Mastercard, it doesn't matter what vehicle it's deployed through. You still get the same revenue. I
So
think.
what happens today? You mentioned Apple Pay, right? When you think about it, you're going to say, "I'm going to pay with Apple Pay." You're no longer saying, "I'm going to pay with my Citi Thank You card," right? So
That's an issuer question. That's not a Mastercard question.
it is, but we, as Mastercard, we also have a relationship with the issuers and the merchants. So we look at the entire ecosystem, and we're seeing Apple Pay coming in, and all the other forms of payments, even some of the card on file solutions coming in and creating disruption in the issuer-consumer-merchant relationship. So the way that Masterpass is designed, and when I was talking that Citi and Bank of America and Capital One can have their own wallet, is at the point of sale, when you're looking online, you're going to be identifying that issuer brand. And as we evolve from this, that's where I was talking about the trust factor. That's where consumers have that trust. Okay, that's my bank offering me a form of payment, and I'm going to trust that. And I think to what you were saying on the merchant wallets, I agree with you. There are going to be some good ones out there, like Starbucks. The question is, how do we Masterpass and Starbucks and the other ones play together? And it's that evolution of what we're going to go see with the wallets is, when you put that card on Starbucks to continue to tap and keep loading your funds into the Starbucks card, because that's what you're doing, you're adding $20 at a time. What happens if that card expired? How does Starbucks know that that card expired and get a new one? How does the consumer know that that card expired and replace it in a simple way, removing friction? So the evolution of Masterpass, where we're going with this, is you can then push a new credential into Starbucks. Or even better, Starbucks doesn't even have to worry about that because they have a token, and that never expires. And the underlying card behind it could be replaced, changed, whatever it happens. So there's going to be an evolution where now the issuers are going to take a little bit back of that control and share it with the merchants that are doing interesting, good things. Because at the end of the day, issuers also make money by being the default form of payment.
Okay.
And I wanted to respond to your question. I think there's no question that the brand of an issuer and a network is much more visible in today's world, where I take my wallet and I physically see the thing. So that, like apples to apples, that compared to I got out of my Uber car and I don't know how that happened or how that got paid, then of course. Now, I think if I were like trying to increase my volume, if I worked at a network or an issuing bank, what I would be trying to do is to win that battle in the next platform. I think I think if you have, I don't know what card I have in Amazon. I have no idea, and I will probably never change it. That's just me. So I think what they should be doing, what they should be thinking about in their strategies. Okay, now there's token vault in IoT environments. Let's win that battle with the Uber American Express thing, so that we get there first. Because if you get there first, you probably stay there for a long time.
Okay, so the battle has moved on from what we thought was a big deal, default payments, to being in the token vault? Claim your space in the token vault to win the next place in the next platform, which I think is a perfect way to end. Yes, but please ask your question.
To your earlier point, the consumer is still choosing their card, and the consumers are still addicted to their points, right? So whether it's ACH or Apple Pay, I don't have data to support this, but I would argue that consumers are going to look for that reward that gives them the most satisfaction.
But I agree with you. But one time, when they first look, are they going to dynamically look for points on an event-by-event basis? Maybe there are people like that.
No, but my point is, when I get that next airline card, I'm probably going to stop and think and say, oh, I just got an airline card.
Maybe I should update my default.
I mean, we just got the Mega Wongo Never Make a Profit on it from Chase's perspective, 100,000 point card. and well, I mean, it'll take them 3 years to break even, because I don't revolve. And we immediately went in and switched all of our defaults to that. Yeah. But we're one segment, I would argue, of the marketplace. Not the majority of people probably are not that points hungry.
Yeah, and I think we just have to ask everybody here, even if you get 2% cash back somewhere, who among you switched to the new Prime Amazon card that's their private label card that gives you 5% cash back when that came out 2 weeks ago?
They switch it automatically for me.
No, but not. I had my Citi. I had another issuer's double cash card in there, and I went in and changed because I saw 5%. But who else did that? Lily, and it's okay. So the rest of you all have Amazon cards. I'll go back and do that now. It's issued by Synchrony, formerly GE Capital, my former employer. No plug here.
That's an interesting play, though.
But nobody else did it because it's inertia and convenience that really wins out, and that's why we believe this whole concept of the default payment is very powerful, because people just don't go back in. They make their decision once. To your point, I want my point card in there, but who is re-examining their payment decisions on a regular basis unless they're in the industry? So maybe we'll have one more question and then we're wrapped up.
I was saying, as a consumer, though, you could literally have on your Apple Pay, right, your points. And I could be making a decision, like you mentioned earlier, by the points that I ultimately want to use right now based on what I'm actually making a purchase. Okay. I mean, that information will just be more than just the card, I think, at some point in time. Okay. More of this, that.
So more fluidity in what you choose at point of sale, time of purchase.
It'll be
So, what I'm missing, am I right that you can't put a Visa card in the Masterpass wallet?
You can.
You can?
Yeah.
Okay. So you can have multiple cards?
Yes.
And choose them. So
yes.
I was missing that, and I think I think that those of us who never revolve and worry about the next free trip may always be in a position to use the same card. But for the vast majority of Americans, compartmentalization, cookie jars is very important. And people think often long and hard about which card is going to revolve, which card is their they're paying full each time, which card is their is okay to use for groceries. That's one of the reasons people carry a proliferation of cards in the real wallet. So I think any electronic wallet that doesn't provide for easy choice, even if it's serendipitous, is not going to win.
One over there from the getting.
Sorry, just one. I mean, it's not necessarily a question. It's just a comment. It's not necessarily a question, just a comment I wanted to kind of pause to ponder. And we've danced around it, but I think we've hit it. It's like the power of the merchant, right? So there's been a ton of research that's happened over the last years about default payments. And what that research has also shown is that biggest incentive wins. So if a merchant offers some kind of incentive to put a specific card in the wallet, that's the card that ends up there. Inertia sets in, and therefore the card never moves. merchants have a lot more power. I think that we all sit in the card world, except for Cliff, I think, right? But merchants have a lot more power than I think we are naturally think about. So I think as we talk about getting top of wallet and think about like what's the default payment going to be and it's important for us to remember and to consider how we play the game with the merchants. Acceptance is key because that's, unless you have enough scale and employee or whatever users, it's never gonna matter from a profitability standpoint. So I was just thinking about that, and I want us to think about it because we all sit on the card side. A few of us sit on the merchant side, but we need to think about it.
Okay, I think we've had that question before. Why don't the merchants steer more? I think we've heard some there about for the merchants it's about conversion. I think we all agree the merchants have a lot of power, but as Alberto has said, and he deals with the merchants and the retailers, those battles are already being fought, and the next place to go to is to put your token in the. Okay, so why don't we start with that? One prediction for the future, or what you think issuers should be focusing on now? Starting with you, Alberto.
I think what I said, I would say it again. I think issuers and by the way, I think this is easier for Amex and Chase with VisaNet. I think issuers and networks should be focused on being the first one to the next platform. The next Uber, the next IoT refrigerator, getting there first. That's what I would be. Well, I guess that's not a prediction. That's who the winners will be, the ones who get there first.
Pablo?
I agree a little bit with Alberto. I think the evolution is, we talk about wallets, we need to start, in my opinion, talking about the evolution of a wallet more like a credential management of sorts. You're not just having your wallet. You need to establish a relationship with the merchants, maintain those relationships, update information. So how do we evolve into that there's a container that can talk to all these systems and keep my information safe from my perspective, but also updated so I can pay at Starbucks or get my rent in time.
Okay, thank you. Well, I want to thank both of them. A round of applause for Panelists.